Are we going to see $50 an ounce silver before we see $5,000 an ounce gold? In this video, I'm going to tell you why both of those metals are going to hit their marks. We're going to see both $50 silver, $5,000 an ounce gold. It's a question of which one gets there first. So give me your opinions. What do you think is going to happen? And we'll keep it as a record, and we'll see a few months or years from now. We'll look back and see if you guys know what you're talking about. Silver right now is at $30.95, so it needs to rise $19.05 or 60% to get to $50. Whereas gold is at $2,679, it needs to increase $2,321 or 85%. But now we're going to break it down and get into the very specific factors that are driving the prices of silver and gold, and will continue to drive them both well past those targets that we talked about in this video. But gold has been doing really well, and you know that silver always follows gold, usually at a lag, does a little bit worse at first and then catches up faster as you go down the road. We've seen that Russia recently added silver to their strategic reserves, which was notable, and it would have been even more notable and will be more notable if any other countries also follow that. But I don't expect that to happen on any significant scale, but it wasn't nothing. And gold has been doing very well lately, actually $1,000 an ounce more than when we first started talking about it. But what happens often is that silver is a little bit slower, and then once it starts going, it'll catch up to gold on a percentage basis. It'll rise faster than gold does. And the difference between gold and silver, gold is more of a precious metal, whereas silver is an industrial metal. About 50% of the silver that gets produced gets used up every year for things like electronics. There's an annual production shortfall of about 200 million ounces. Here, listen to this. Total silver demand is projected to considerably outstrip supply again in 2024, leading to a forecast deficit of 215.3 million ounces. If realized, this would mark the second largest annual shortfall in over 2 decades. Of all the price drivers we talk about, that'll be the one that gives most wind in the sails of silver. And understand that these production shortfalls will build on themselves. They didn't have hundreds of millions of ounces of silver that they needed last year. That's on top of the year before, and now this year, next year, maybe again. And it's just deficit. Eventually that'll just drive the price of silver up dramatically and pretty quickly. And I'm also going to tell you guys what to do about it, how you can benefit. It's not too late. There's so many opportunities, and we'll talk about them in this video. When you're about to go into a recession, people get worried. They expect things like copper to be in less demand, oil to be in less demand, silver. And so the recession approaches and these prices will start to come down. So people see silver as a industrial metal, and those people are getting scared by the approaching recession. But there's a shift starting where people are now recognizing it more as a precious metal, especially because of the much higher price of gold. People can't necessarily afford a gold coin, so you might buy a silver coin. You can invest in silver, precious physical metals, for $32. Analysts predict that silver prices could rise in 2024 due to increasing industrial demand, particularly in renewable energy technologies and electric vehicles. And here's a CEO of First Majestic Silver we've talked about in the Peter Leeds newsletter. Back in the day, Keith Neumeyer of First Majestic Silver has said that he sees the white metal reaching $100 per ounce. And there are other drivers for silver prices, just basic general inflation, or when interest rates come down, etc. There's plenty of other drivers. But now let's talk about, those are the meat of them. Those are the ones that stood out to me that I wanted to talk about. Now let's get into the gold. And don't forget, we're going to talk about what you can do about it, and that it's not too late, and you can still benefit from this move that I've been talking about since gold was $1,000 an ounce less. Since way back in the day, what I was always showing you was the central bank money demand, specifically China. And you can look at some of these stats. Here's some of the more recent ones. And you always see the same names on here. You got China, Russia, Iran. Gold is moving to the east, away from the west, or away from Europe. That is what has been driving this ongoing price increase for the longest time now, and will continue to drive it until this buying slows down. Plus you've got all this global military uncertainty. I don't like where the world's going right now. It's freaking me out. And as long as that's happening, there's going to be a risk premium built into things like safety assets like gold. So the price of gold increases. A lot of times oil will increase by several dollars a barrel. Meanwhile, another pressing issue, just to make sure that as a wet blanket I say enough negative stuff to depress you fully every time you watch one of my videos. This U.S. debt bomb is not only clearly known to us, it's clearly known now to players all over the world. You see China and Japan both curtailing purchases of U.S. Treasury bonds. You see China and Japan selling the holdings they have. So what happens is when you have a fiat currency, there's a massive worldwide loss of confidence. Yes, the dollar's been doing well because a lot of other comparative currencies are doing horribly. And it's doing well lately because of a lot of artificial influences. They're controlling these markets. But no matter what, you can't fake it forever. If someone's a dishonest jackass, they can only pretend to not be that for about 6 months, generally, in my experience. So there's a generalized loss of confidence in the US dollar already among players worldwide, and that will only become more obvious that we're absolutely treating our currency irresponsibly when we start printing a lot more money to cover over the things that we've already benefited from that we have yet to pay for. That's directly involved with why every few months you hear about, or every few quarters you hear about a government shutdown or the government's out of money. And I always joke about how it will never stop. It literally will just always be doing this until they resolve the problem. And they act like, oh my gosh, it's happening again. What do we do? And they do the same thing they always do. Every single time. It's ridiculous, and they get paid for this. And the primary place in the mind, worldwide, always, for a risk-off asset is gold. It's always been gold, it will always be gold. So when you think about risk, and there's more risk right now than ever in a long time in our lives. When there's risk, money goes into things like gold. Meanwhile, we just got another hotter inflation reading yesterday, and hotter than expected. And as I'm telling you, in the last video I just did was about how Trump's policies, not a political statement, I'm just saying these policies exactly as described will be inflationary, and explain why and how that's going to affect you. That was the last video, which is why you want to be subscribed to the channel so you don't miss stuff like that. And interest rates are going to be coming down, and as they get lower, that adds value to the price of gold because it hurts the US dollar's value. And of course, gold is always the number one shield for you if the mud hits the fan. Gold preserves value, and in a time when all values are declining, the fact that it's preserving value actually adds value to it, and that value then increases. That's what's happening with gold. Now check out this chart, it blew my mind. Central banks have been resetting the relationship between gold prices and interest rates. This is a chart from Goldman Sachs, and you can see that line right down the middle there. That's when the Americans froze the Russian central bank assets, and all these countries decided that they needed to get out of the US dollar. And just ahead here, I'm going to tell you how you can still benefit from all of these moves in precious metals that are happening right now. Even with a small amount of money, turn a few hundred into a few thousand. I'll tell you in a second. But first, I'm going to give you my take on what I think is going to happen in terms of the timing. And also, if you're putting a comment below this video, say which is going to be first, gold or silver. Gold to $5,000, silver to $50. Which one first and when? My take is that silver is definitely going to rise the 60% it needs to get to $50. A lot faster, and gold's going to rise the 85% it needs to increase to get to $5,000. I believe that both of these marks will be attained. I believe that silver will get to $50 first, and it'll be in 2025. So not long from now. The supply deficit is meaningful, and it keeps adding and building. There's not enough silver. The world's just not recognizing it yet. But of course, if you want to benefit from this, if you get into a really high quality, small mining company that's in the silver or gold space, they can generally do pretty well. I expect the entire complex to do very well as the US dollar declines and as commodity prices across the board increase. A lot of the best companies that we put through 29-point Leeds analysis, which you can see all about on peterleeds.com. Every step of Leeds analysis, you can see what we do. When we have a stock that we like, that we put through Leeds analysis, and they're a good mining company, a good low price, technically a penny stock, that's where you can make a lot of money quickly by benefiting from the rise in precious metals prices. If you want to get stock picks from me, join the peterleeds.com newsletter. And if you want enhanced contact with me, then please become a Peter Leeds Insider.